Welcome to the Four Wise Monkeys, the best shares and investment advice on the web. Our four monkeys providing the wisdom this week are none other than David Stevenson from the Financial Times, Stephen Barber from Self-Trade, ProShare investor Paul Dolman-Darrell, and the naked trader Robbie Burns. And your host today is Ryan Dean. Welcome to the 7th episode of the Four Wise Monkeys, and on today's show there's no Robbie Burns, so we'll be jumping straight over to the monkeys in the studio to find out their investment ideas. Right, Paul, you're up first this week. What have you brought to the table for us?
I've been looking at how you might enter the green market if you're interested in investing in ethical stocks. And I've been looking at an ETF called PowerShares Cleantech Fund. This company invests in 75 of the best green companies, including ASOS, which last week when I wasn't here, I mentioned. It's been a real outperformer, 42% last year, doing well this year. So I see it possibly as a way of entering green.
Now, David, green is obviously quite a fashionable sector at the moment. Is it one that interests you, though?
The problem is I wouldn't buy the underlying stocks because I think they're vastly overpriced, some more than others. I think solar stocks are particularly overpriced. And I think as soon as oil prices start coming down, I think a lot of the shine will come off the renewables sector.
David, you're up next. What idea have you got for us this week?
It's a fund called Blackstar Investors, which is run by one of the most successful city-based shareholder activists, really experienced management, and their big speciality is effectively their private equity in South Africa. They buy younger, mid-sized companies, grow them, and then flip them. And they have a particular niche, which is that they are strong on this whole black empowerment theme, on the growing black middle classes and selling to black businesses. Shares have got bashed, and crucially, the management have been aggressively, and I mean aggressively, buying back the shares in the last few weeks. Is it the right time probably to buy them? Probably not. I mean, they're probably going to get thrashed for a few more weeks. But I think it's a brilliant long-term value play.
Now, emerging markets, they've really split the monkeys over the last couple of weeks. Paul, where do you stand on South Africa in particular?
For me, South Africa is probably better than the rest of Africa. It's got a more established infrastructure than most of the African countries. It speaks English, which is an advantage. Has political tensions there, and that's a serious concern. But you're going to find that any emerging market. South Africa is a market that I like, prefer it to the rest of the African economy.
Okay, Stephen, you brought up North Africa and the Middle East a couple of weeks ago. Where do you stand on South Africa?
Yeah, I mean, I think it's an interesting idea, and it's a similar premise actually to the idea of last week in India. I wonder if it actually has the same growth potential as India would have, in terms of the economy and the growth of the middle classes.
Well, sticking with you, Stephen, a little birdie has told me that you're going to make quite a bold prediction about the FTSE 100. So what is that, and why are you making it?
I think we can probably say that there's a level of support at 5,100. There's possibly even one at 5,300. And I think what's been interesting about this week is I've struggled to find any good news. And yet the markets in the UK and in fact across Europe and in the United States have been relatively robust. And part of that's the oil, of course, but it's partly because the way markets work and their discounting mechanisms. So a lot of the bad news that we're experiencing has already been priced into the market. We could see over the shorter term, over the next few weeks, the market continue to rise. Perhaps, I think 5-7 would be a nice target.
And Paul, would this impact your portfolio? I mean, do you see it going this way?
From my point of view, I think banking could still go back heavily down again, having risen in the last 2-3 weeks quite heavily, and I'm considering coming back in here at some point in time and researching shorts on big oil stocks in the FTSE 100.
Okay guys, now seeing as though Robbie is not around, I thought I'd take this as an opportunity to come in and stake my claim as a wise monkey, and I'm going to be talking about ASOS. That's as seen on screen, the clothes retailer that is purely online. And the reason I'm picking ASOS is because apart from the fact that every girl in the office is always on there buying clothes, they've got a great business model. They sell French Connection type clothes at top shop prices. Apart from anything else, I see this as something that could go global, and if it did, I think that would really improve the price. But more importantly, I want to hear what you guys have got to say. So Paul, up first, is this a good pick?
ASOS, my most successful share of all time. So it has a little place in my heart. Actually, a 20 bagger.
20 bagger.
But From my point of view, the shares are extremely expensive at this point in time. I would not, as a fresh purchaser, be trying to buy stocks in them. I'm a bit concerned about the global route. It's not easy. Retailers have often failed at it, and I don't see why it would be any easier for a web company. And then additionally, on top of that, I have a real concern that they may break away from their web model and maybe move to the high street. And I don't think that's going to be as easy as they think. And so as a result, I kind of think it's actually the growth potential that they have that may actually cause them problems.
So not a great start if the guru of ASOS is telling me I'm in the wrong. David, tell me you don't agree.
I'm afraid I buy Paul's analysis. The good news is in the stock price already. I can't see how it could go phenomenally higher. It might go a bit higher, but I just think the risk-reward balance between it potentially going down and the potential for a little bit more gain is not big enough.
So there you have it. I'm obviously not going to be initiated into the Four Wise Monkeys anytime soon. Thanks, guys, for that. Have a good laugh at my expense, and we'll see you next week. So there you have it, another set of interesting investment ideas from the monkeys. Remember, if you're watching this on iTunes or YouTube, to check out the website FourWM.Co.uk for more info on all the shares we talked about today. We'll be back next week.